Hi, everybody. Welcome to the Europas Tech Startup Awards and Conference Workshops. Today's event is a sector deep dive into space tech to understand how the ongoing COVID-19 crisis is impacting the industry, as well as where the industry is right now. It's part of our ongoing series as part of the Europas Awards, which will then be held on June 25th. And we've got a few things tucked up our sleeves for that. Just go to theeuropas.com to find out more. This panel is going to be a kind of state of the nation on space tech and a look at how COVID-19 and its fallout is impacting the space tech sector. The sector's already seen some high-profile bankruptcies, postponed space launches, rescheduled missions, of course, and SpaceX's recent Dragon manned launch was a recent bright spot. But of course, the space tech industry is much broader than just launch vehicles. It involves big data, AI, many other sectors. So guys, please participate in this session. It'll be great to get your feedback. If you'd like to ask a question to one or more of the panelists, just drop it into the Q&A box or the chat. Chat is fine, by the way. Drop it in as they occur to you, and we'll address as many of them as we can during or after the event, after the session discussion. The discussion is also being recorded, and the recording will be shared with all of you participating afterwards and any ticket holders who weren't able to join us right at this exact time. So let's get on with the show. We're joined today by Mark Boggett, who's the CEO of Seraphim Capital, who are investors in space tech. Jason, you're gonna have to help me. I think it's Maruthi and Naden.
Very close, Maruthi and Naden.
Thanks so much. And I think that we should be joined shortly by Barbara Ghinelli, who's the director of Harwell campus, the Science Tech Business Cluster in Oxford, UK. I think that she's had some technical issues just getting on, so we should be able to have her join shortly. Let's start with some introductions. Mark, would you like to kick off? Tell us who you are and what you're doing.
Yeah, certainly. So Mark Boggett, I'm the CEO and one of the co-founders of Seraphim Capital. So we are a space-focused investment firm. So we have three core initiatives that are focused on space. First of all, we have a venture fund, Seraphim Space, that invests in seed and A series space-related businesses. It's a $90 million fund. We're backed by some big space companies like Airbus and SES and Telespazio. We've got partners in the UK, US, and in France. Alongside that, we run a space-focused accelerator program called Seraphim Space Camp, and we run an angel network, again, focused on space, UK Space Tech Angels. So between those initiatives, we have a portfolio of 60 space-related companies, making us one of the most active investors in this area globally.
Fantastic. Jason, tell us about you.
Okay, so I am from the European Space Agency. Just like NASA, we are one of the very few agencies that touches every single aspect of space, from exploration to safety and security, to space applications and also satellite manufacturing in terms of access to orbit and the development of CubeSats. The agency were quite interested in supporting ventures from startups to mid-caps. And really, we have one remit, which is to enable Europe's capability in space. The interest for us in terms of supporting startups is via the Space Solutions Program, which is an amalgamation of two separate programs. One is our incubation program, where we have 22 incubators across Europe, and we have a business applications program initially focused on downstream, but the idea being that we try and commercialize, help support the commercial, let's say TRL or a commercial maturity of these businesses. And we provide grants and match funded support as well as technical assistance to the startup community. And if you combine the business applications and the big portfolio, we have about 2,000 businesses that we have supported and are currently still in the portfolio. And also we have a network of ambassadors and other venture support activity, making us we actually have the largest space venture support network in the world. And we are lucky enough to be working with Mark with the team at Seraphim and also with the Space Camp and with Barbara as well, because we have one outpost in the UKRI at the Harwell campus.
Well, that's a good time to bring in Dr. Barbara Ghinelli, who's the director of Harwell campus. Thank you so much for managing to join us. Do you want to just give us an overview of what you're working on and a bit about Harwell?
Yeah. So I'm Barbara Ghinelli. I'm responsible for the development of the Harwell campus as a whole. The Harwell campus is a real national asset of international importance. We have more than 200 businesses working on our site and more than 6,000 people, very highly skilled people working there. One of the key developments on the campus is the space cluster, which is really developed over the past 10 years. In fact, it started during the previous economic crisis, and that has demonstrated the resilience of the space sector over the course of the years. The space cluster has grown from just a couple of organizations to 105 organizations to date, and employs more than 1,000 people on the site. So this is very much in line with our target of reaching 5,000 people on the site working in the space sector in 2030, which is also part of the overarching strategy of the UK sector of having 100,000 people actually working in the sector by then as well. So Harwell is really a big engine for innovation and growth for the sector. It's been really a gateway for all of the UK sector, and has also contributed to a big increase of inward investment into the UK. And we've got a number of companies working there that have decided to come even from Silicon Valley to the UK because of the entrepreneurial ecosystem and innovation ecosystem that we've set up in the Harwell campus, but also linked to the broader capabilities across the UK. So really our remit, which is also very heavily reflected in our 10-year strategy that we've just launched recently for the space cluster, is to support companies, definitely now even more than ever, is about the recovery from the Covid-19 crisis, and really providing the support that the companies need, working with our partners, including those on this link today, Mark and Jason, to really help companies in their journey from startup to scale up, which is a big challenge that many companies face. That's about it for the moment from me.
You've got a lot going on at Harwell, I can tell. Just to kick things off, Jason, could you just perhaps give us a little bit of an overview of where things were? Well, obviously, OneWeb was quite a big, high-profile bankruptcy. I mean, we've seen SpaceTech kind of really take off, as it were, in the last few years. But it's kind of been in fits and starts, hasn't it? Where would you say things are right now?
Okay, I think the space sector is probably splitting itself into, let's say, three historical segments. So you've got pre-COVID, current, and future COVID. And I think current basically spans the next, basically what's happened this year. Pre is probably just before February, maybe January. And if you look at the pre-COVID side of things, I think on an investor point of view, in terms of people that don't really understand the space sector, then I think it was quite a skewed business in terms of the sexy space stuff, such as rockets, astronauts, mega constellations. Really were the what people considered as really that's what the space business is. The interesting thing is, once you do a deep dive into the space sector, you suddenly realize, well, actually, you know what? Launches and human space flight and satellite manufacturing actually is probably 1/10 of what the actual revenue accounts for 1/10 of the revenue of the space business. The rest of it, basically around a 50-50 split, was actually ground equipment and also satellite services such as remote sensing, telecoms, etc., etc. And so that was the space sector. So it had a combination of capex, very heavy capex in terms of ground support and satellite manufacturing. But the interesting thing now is that an emerging, let's say, sector that was the subsector that was coming through was applications. And so it's applications of telecoms, but also applications of data. And that was the interesting thing, right? Data suddenly became the price for data suddenly became lower and lower and lower. And as people like agencies like us, we actually are giving data away. And so now you've got a current COVID, let's say, space sector, which is slightly different now in terms of availability of human beings, right? Because human beings are at home. The issue that we're facing is basically teleworking. How do we mobilize the space sector virtually? And companies that are faring that are virtualizing quite well are doing quite well. There's issues here with supply chain in terms of human beings needed to actually build things, set up things on launches, and also operations as well. So we're seeing a bit of a struggle there. There's also a struggle in terms of sales pipeline as well. So companies coming through and chasing those sales, they're finding it a lot harder and harder. And then you've got the post-COVID. So what I'm thinking there is, what's going to happen in terms of the long term? What does that space sector going to look like? And I think that's where we're going to start seeing changes, and we're going to start seeing emergence of those changes now. We're not talking accelerated trends, but certainly changes where businesses will go, well, actually, space is good for other things. It's not just satellites and rockets and spacey and sexy stuff. It's all about SDGs and United Nations sustainability goals and space for good and things like that. And so I think there'll be hopefully a new space sector that's certainly a lot more resilient, and it's also a lot more resilient in terms of the human beings that are needed to make the sector happen. So I think that's going to change.
I see. Thanks, Mark. Space tech wasn't really a thing until a few years ago, because obviously it was the preserve of governments, but now that we've got many private sector companies and small startups, shall we say, when we talk about space tech, I guess we're talking about startups. And as an investor in that space, what do you see sort of emerging from the current environment? I mean, where did you think things were just before, and where do you think things are going, like because of what's going on with the pandemic?
Sure. Well, I can put some numbers to that, because my company Seraphim publishes a quarterly index, which we call the Seraphim Space Index, whereby we measure all of the VC activity globally going into the space tech sector. So as at the end of 2019, the sector was tremendously robust. So 4.1 billion was raised in the year, which is a 21% increase on the previous year. And we'd seen previous years of similar sort of levels of increases year on year. Yeah, and that really continued to the 31st of March. So we saw a 17% increase looking back March to March. So and the figure had grown to 4.7 billion. So ahead of the COVID crisis, the sector was really in very good shape. There were some big numbers there that are just worth drawing on. So OneWeb accounted for 1.25 billion of that figure, with SpaceX accounting for $500 million. So, as you've mentioned already, OneWeb has subsequently failed. But I don't think that this is something that is really going to be very damning for the industry, because many people saw that coming, and there are people still backing companies that are doing the same thing, like Starlink and Telesat LEO. So OneWeb was the least well positioned of all of the new entrants. Its cost structure, its access to the market, were all factors that led to its failure. It took too long to launch its constellation, and its constellation cost too much. So no one was surprised there. There's been other notable bankruptcies, such as SAS Global, Intelsat, Speedcast. But I think all of those have got their own reasons for failing, and actually, really, COVID really isn't at the heart of those failures. So I don't believe that sentiment has turned against the sector. I think the reality of the market is that as a relatively, well, perceived to be capital-intensive area, the sector is going to be suffering from drawing sufficient investor capital in order to be able to take it forward. That's not what we're currently seeing in the market. There still remains a massive amount of interest, but I think that companies are going to find it difficult to continue fundraising in the new environment.
Do you think, as a quick follow-up question, just briefly, what if you could answer, do you think the COVID-19 pandemic is going to be used as an excuse by the industry to sort of shake out the industry, as it were?
I think it's going to happen across every technology sector, where the also-rans and those that are poorly funded are going to fail, and the winners will be those that are well backed, they're demonstrating traction, and that they will take advantage of the downturn, consolidating their position, acquiring complementary technologies where they're available, and really taking the sector forward. So I don't think space is unique to across any other technology sectors. We're already starting to see that happening. Some of the best funded companies are now drawing up lists of M&A lists of those that they're going to take out. Right. And actually, the best and most promising companies are definitely not having a problem with getting support from their investors. We've seen this across the portfolio, where strong companies are raising money right now, closing rounds, and are fortifying their position by having 12 months to 3 years worth of cash sat on their balance sheet. And we've got every confidence that those are the companies that are going to drive through and continue to be the leaders and come strongly out of this downturn. But there's going to be a lot of failure.
I see. Dr. Barbara Ghinelli, what's at Harwell? Obviously, there's a lot of deep tech, a lot of hard science, a lot of hardware as well, of course. The COVID-19 pandemic must have enormously hit the ability for people to work, obviously, because of rules about social distancing, many offices now being shut down. How do you see the industry managing to be resilient, and what do you see some of the winners coming out in the next few months and years?
Yeah, so I agree with Mark, actually, that the situation is similar across all sectors. You see that companies that are strong or were strong prior to the COVID crisis remain strong now, depending on their cash flow and how the finance and business model has been set up, essentially. So those are the companies that we're seeing anyway continuing to be strong and continuing securing investments even in this period. I can give you an example of one of the companies, Astroscale, for example, that is based also at Harwell and has got also a presence across the world. And they've just acquired the ESS, and they're going to become really the only company, I think, around the world solely dedicated to on-orbit services for LEO and GEO, for example. So those type of companies that have got a really strong business model, they're going to move forward. On a broader scale, I think that space is actually well placed to actually support the UK economy as a whole, because space is really a fundamental infrastructure also for our green economy, for keeping people connected remotely as well, monitor our environment remotely. So all these functions that are absolutely critical, especially in these circumstances of a pandemic and post-crisis as well, to support the world to get back on its feet, really. So I think that the resilience of the space sector is going to be ever stronger, actually, and demonstrating even more what that sector can do for other businesses as well. And in the space cluster at Harwell, we're seeing a lot of links as well between space companies and other sectors, because Harwell covers a very wide range of disciplines, including life sciences, energy, material sciences, and others, because they are supported by the unique combination of our large science facilities. So having got those sectors present in the campus is actually creating also opportunities to collaborate across sector, and we're seeing space companies supporting healthcare solutions, for example, working also with the satellite applications catapult with the European Space Agency on site and the UK Space Agency. So there have been recent calls, for example, from the UK Space Agency and European Space Agency to support, to provide solutions in this COVID crisis. And a lot of our companies have been involved in those and providing those solutions. And for what respect of the access to laboratories, some of our companies are actually used to work in a very protective environment. So wearing masks and protective equipment anyway for what they're doing. So a lot of them have been able to continue some of the operations also within the guidelines of the Harwell campus, which we're working very closely with our companies on a day-to-day basis to make sure that we establish the safety, the health and safety conditions that then allow our companies to be productive even in this period.
I see, yes, I see. There's clearly some adjustment, but obviously some interesting synergies being created there. In terms of the actual sort of investment environment, Jason, do you see still companies being able to raise funding? And I'm going to, obviously, Mark, we're going to bring you in on that discussion. So, Jason, what do you think?
Yeah, okay. I think deals are still being done. In terms of funding, the agency, we provide public funding, and we haven't seen a reduction in the number of companies or ventures applying for funding from our particular programs. We try and match the funding with private capital as well, and that's certainly getting harder to draw on that. But I think ultimately it comes down to the types of businesses that, in terms of how they're judged, in terms of technical maturity, operational maturity, regulation maturity, and to some extent risk as well. And so as long as those companies are, let's say, addressing, or those ventures are addressing those, let's say, increasing the maturity in those areas, then they will always be, let's say, prime candidates to receive funding from us, or some sort of financial and technical support from us, but also from private capital as well. So we're not really, it's just, things are just taking a bit longer. Internally for us, we've actually, teleworking has worked quite well for us as far as the agency is concerned. And so for the UK deals, we've already done quite a lot already in terms of providing public capital support to businesses. And that's whether it's looking at COVID responses or mining or whatever types of applications. So no, we still see a huge amount of activity.
Mark, are you saying, would you concur, or would you have a different view on that? And also, I'd be interested in your view of what particular sectors of SpaceTech will do well in this environment.
Yeah, so deal volumes have naturally declined very significantly for the sector. I don't think it's immune to what's going on in the broader VC sector, where Bowhurst has been reporting on the number of deals falling 2/3, 50% to 2/3 down. I think that's reflective of what's going on in the sector. We're seeing that angels have become more negative. It's more difficult to bring angels into a round. We are seeing corporate investors which have really moved away from investing in the sector. We're seeing that really across the board. It's much more challenging now to bring corporate investors on board. just at this period of time. I think that ultimately we will see them come back to the market, but it's just much more challenging now for mature businesses that have got their own deep-seated problems to be writing checks to support risky startups. So yeah, we also are concerned about the hardware versus sort of software type splits in the mind of investors, where hardware investors are very focused on their existing portfolio, making sure that they are that they're looking after the portfolio and ensuring that they've got sufficient funded runway, rather than looking at making new hardware investments. That's what we're seeing in the market. The software investors are seemingly more resilient, seemingly more prepared to make investments, which is good news for the downstream side of the business, where we think most of the future growth is going to come from eventually. In terms of the areas that we remain focused on, where we see opportunity, it's little change, really, to be honest with you. We really don't see that the promise of the small sat revolution has come through at all yet. Even the category leaders have still only got relatively small numbers of satellites, measured in low hundreds. So we still see that the opportunity is absolutely huge, and so we're still continuing to invest in large and ambitious constellations. So, for example, during COVID, our last investment that we closed in March was for a GPS LEO constellation that's still got to put up 300 satellites. It's got no satellites in orbit yet. That company closed its funding round without any problem, and we see that is representative of the most ambitious and well thought through plans. We think money will still be available there. Looking elsewhere in other sectors, where we see a lot of opportunity in anything to do with cyber, where we continue to see significant growth, and all of the elements of the market that sort of reflect that. So quantum technologies, as they're applied into space, antenna technologies around power consumption and capability, anything to do with increasing bandwidth, tracking ability. So we believe that there's going to be a period of a reset during the course of 2020 as investors reevaluate where they're interested. But we'll see resumed interest in the sector, where investors are continuing to invest, not at previous levels, but I still think that the best companies are going to be able to access the finance.
I see. Now, Barbara, would you like to comment on any of those, the previous statements, either the amount of money available to startups or the sectors?
Yeah. I think obviously it's clear from the various interventions, also from government and government organizations like UKRI, that there's been quite an effort to actually cover that gap existent from the private sector investment at the moment, because obviously certain companies need to keep their projects ongoing, especially in the startup stage, in order to survive. And we are doing our best to actually provide that gap funding to actually support them in their journey. So I think that there is a lot around the new initiatives that are going to support that. We are also continuing very strong, for example, in our business incubator center in collaboration with the European Space Agency, and that is going really strong still at the moment. A lot of our companies are still doing very well also at an international scale. Archangel Lightworks, for example, received a prize recently by the Florida Ventures Fund as one of the most innovative companies recognized in the sector. So there are a lot of activities as well on the campus and in our network that are focused as well in supporting companies in either providing support on getting their cases, their business cases together for future investments, also to prepare their supplier profile to showcase in future big events like the Farnborough Air Show, so that they can actually again prepare themselves to get funding and also to collaborate with bigger corporates. There are a number of initiatives, again, also within the cluster, and also some projects as well that we are establishing to stimulate the commercialization of new ideas, like the cross-cluster proof of concept fund that STFC manages. So we are trying to make these programs also more flexible to reflect the current conditions. So there is I think still there is a lot of momentum behind, and I think that we are all working together in order to try and support companies in this period, and also preparing them for the post-crisis recovery.
Actually, so we've got a couple of questions coming in. Perhaps one would be quite relevant, perhaps for you to tackle. We've got a question here from Ramsey. As we prepare to finish our EU exit process in 6 months in the UK, obviously, it's becoming increasingly likely that we will indeed lose access to the encrypted PRS signals from the Galileo satellite constellation. What are your views on that?
Okay, who wants to go first? Barbara.
What did you say, Jason? Did you say something?
Barbara, I'll let you start first.
Yeah, probably your best place to answer that one anyway, Jason. But I think my view is that, well, for what I know, there are discussions in progress, and I don't think that we've got an immediate solution yet at hand. I think that I think that there is a mutual benefit in continuing some involvement on both sides. So I don't know, Jason, if you want to add anything else on that, more specific.
Yeah, I think the key here is mutual benefit. So this is a tension that's been ongoing for quite a while, and obviously there is the European Commission activity around its own agency for space as well. And our Director General has been, Director General's office certainly has been working very hard with the European Commission to continue the cooperation, certainly around Galileo. I think the issue, I think one thing that we're going to, in terms of the UK's commitment to the European Space Agency, we had a ministerial in November where the budget allocation or contribution by the UK has increased. And so that basically reflects a healthy appetite for UK to stay part of the European Space Agency. And that is literally comes back to mutual cooperation between our member states. So that has to continue. But also in parallel, there are bound to be national programs or national, let's say, GNSS type activities as well. Mark already alluded to one reference to your portfolio, Mark, and that's going to continue. And I think a healthy competition is a good competition.
Yeah.
Mark, actually, if I could ask you, there's a question coming here from Nikki. What does the broader VC industry understand the space tech opportunity, or do they consider it as a sort of a niche activity?
So that's a challenging question to answer. I don't think I really know the answer to that. I mean, there are a lot of investors that have invested in this space, over 200 in the last 12 months alone, 750 venture funds investing in the sector over the last decade. And investors, when they're making an investment, they do a lot of work in advance, really try and understand the sector, and then build on that after they've made investments, sitting on the boards of these companies and really growing their appreciation. I think the interest in the sector remains significant because it genuinely offers long-term growth potential. And there are many untapped markets where there's great potential to build billion-dollar businesses. That's always going to attract other VCs. I just think we're going through a period of reflection now. The period that we've just gone through is really very much about the VC community looking after their portfolio. So where I'm concerned is that where you have a generalist technology venture fund that has multiple portfolio companies, including one or two space companies, that those companies are less likely to receive the follow-on funding that's obviously limited available to the entire portfolio, because the team have a shorter track record of investing into the sector, less experience, no exits. It's therefore easier to back companies in sectors that they know and understand better. So I think that that's a negative that's hanging over the sector. And I think it's really going to cause us immense problems during the next 12 months. Well, that is really a factor at the forefront of the investor community's mind. I think after we've started to see some recovery, and you're seeing some of the stronger space tech companies raising bigger rounds and continuing as before, I think that we'll see a return of positive sentiment to the sector. But I really do think that the next 6 to 12 months are going to be a real challenge for all but the very best of the companies in each subcategory. So my recommendation is to any space tech entrepreneurs is that they do whatever they can do to avoid fundraising during that period. And that means going back to their existing shareholders, making sure that they've got a funded runway to get them through this next period, where I think there's going to be the huge crunch in terms of what's available from the venture community to this specific sector.
Well,
Mark, sorry, can I just add, based on our perspective as well? We've already deployed on the Space Solutions Program about 200 million plus into European businesses. And if you look at the Harwell site via our UK incubation centre, we have 85 ventures up to date so far that we've incubated, and this number is increasing and increasing and increasing. And what we've found is that the public money is really quite powerful, or certainly the ESA support or the ESA badge is really quite powerful in providing a bit of validation and, most importantly, trust into actually, you know what, these ventures are proving to be or could have the potential to be the best in their field. And we are seeing, and that's why we're seeing lots more companies come to us, and that's why we're able to provide our funds to help build out the maturity of these businesses to help them weather the current storm and future storms. So, as I said, 200 million plus deployed into businesses, and match funded with more than 200 million worth of private capital as well. And that's the sentiment that we're carrying, that we're seeing, and that's what we're communicating to the investment community as well. And we feel that certainly at the agency we have a place here where it's our responsibility to keep communicating those success stories, and so we have to keep doing that.
Obviously, ESA has been, stepping up to the plate in recent times. Barbara, do you think that the UK government is recognising the opportunity? Obviously, there's a lot of government funding for initiatives like Harwell, but do you think it could do more? Do you think that, and also, do you think the regulatory environment is giving the sector enough space to breathe? We've got a new UK space agency, of course, but could it do more?
Well, just to this point, the UK Space Agency, for example, is running a weekly survey with companies during this crisis, so that they can gather any issues that these companies are facing during the crisis, and what they expect to face also post-crisis, so that they can inform government policies and adjust to that, essentially, so that there is a more informed intervention by government in this sector. And we're working very closely with the UK Space Agency, and when I say we, I'm talking about the whole space cluster, so including the European Space Agency and Catapult and the Science and Technology Facilities Council and the rest of UKRI. So we're all working together to actually leverage our funding opportunities. So you see quite a few opportunities coming, for example, from Innovate UK within UKRI as well, focused on exactly filling in the gap of private investment at the moment. And also the recent future fund announced by government, which is essentially doing exactly that, trying to fill in that gap, providing convertible loans as one of the key feature of that fund. So I think, yes, we can do more, and obviously we're listening, and this is why we are in constant communication with companies both within our campus and across the UK. But it's difficult to predict actually how this all is going to, develop in the future. So that's why I think that what we're doing, keeping an eye on things as they develop, is the right thing to do, and having this strong network already of partners working towards the same goal, I think, is really important, and that's exactly what we're doing.
Fantastic.
Yeah.
Well, there are still 1 or few questions come. Sorry, did I interrupt?
Yeah, I was just going to say, I think that the government initiatives that are designed to help the overall market are great. But I think that the SpaceTech sector is somewhat lacking in support from these government initiatives. The majority of them aren't really able to be drawn upon. You know, the C-bills, for example, is not helping any companies that are loss-making. Futures fund now available, but it's it's a very small allocation across the entire venture fund market. So it's challenging to be able to access that. So I think that there are still a lot of problems sector related in terms of being able to access support. I think just going to the point that was made by Jason, I think right now as they are doing. The grant providing authorities focused on this sector can have a big impact. So European Space Agency is very much leading forward, as is Innovate UK. And I think that this is really very helpful for bringing investors into the sector. I mean, right now, investors recognise that at the bottom of a financial crisis is the time to be investing, and using non-dilutive capital and signposting from the European Space Agency about supporting companies with large amounts of non-dilutive capital is a great way of them bringing investors like us into the companies that matter, those that have the potential to become the big leaders. So we're very guided by investing into companies that can demonstrate that they've been able to access this non-dilutive capital, which is increasingly being made available, but to the best companies that in the market.
Yeah, that's a very good point. Thank you so much. Although we've got one or two questions that we could bring in, we're unfortunately running out of time now. And what I'd like to do is move to the pitches. Now, I would be delighted if, obviously, everyone's time is very pressed these days, but I'd be delighted if the panelists could join us. But if I could just say thank you quickly to Dr. Barbara Ghinelli, who's the director of the Harwell campus, Mark Boggett, who's the CEO of Seraphim Capital, and Jason Maruthniaden, who's the business broker for the European Space Agency. Thanks very much for joining us for the panel discussion section. And with that, I'm going to hand over to my colleague, Diane C. Morrison of the Europas, who's going to throw us into the pitches. And we've got some companies pitching today. So Diane, over to you.
Hi guys, so first up is Angoka, and pitching is Shadi A. Razak, co-founder and CTO.
Appreciate it. Yeah. Brilliant, thank you very much. Shall I start?
Go ahead.
Yes, go ahead.
Brilliant. Hello, everyone. My name is Shadi Razak, and I'm the CTO of Angoka. Angoka's mission is to ensure the safety and resilience of machine-to-machine communication. Next. As an increasing number of devices are becoming connected, they communicate over a complex web of networks and communication channels. And although they're themselves, some of them are still vulnerable to attacks. Next. Angoka's solution represents a paradigm shift, as the focus is on securing the devices rather than the networks themselves. By using an embedded fingerprinting technology, devices can be uniquely identified, and together with our patent protocol, it's allowed these devices to create trusted communication over untrusted networks. Next. Angoka's solution embeds trust in machine-to-machine communication across smart cities, critical national infrastructure, autonomous transport, defense, and aerospace. For example, our fingerprinting technology can protect against unauthorized access to media subscription and broadcast spoofing. We also can safeguard the integrity of satellite observation and ensure the authenticity of the data provenance these observations are based on. Next. Europe champion in protecting satellite communication, we work with world-class universities and global tech companies across the UK and Europe. such as the UK National Cybersecurity Centre, the Centre of Hardware Security Excellency at the University of Queen's in Belfast, BT and VeriSign, and through SARF and Space Camp, we are now engaging with ESA and others like Europas in order to embed trust in IoT communication around the world. Thank you very much.
Okay, great. Does anyone have any questions for Angoka, for Shadi?
What's the sort of the big data play here in terms of what's that?
What type of data are we talking about?
Well, I mean, what sort of accessibility, what sort of collaborations, partnerships can you put in place?
Well, for us, we partner with device manufacturers, with satellite operators, or control stations, for example, to authenticate the communication with them. We also partner, depending on as well as operators of infrastructure. And the idea for us is to safeguard the integrity of the data and allow them to track the data provenance throughout the networks, whether they control these networks or a third party have access to that network.
Thanks very much.
Okay, thank you. Our next pitch up is Focalpoint, and pitching is Dr. Ramsey Farger, CEO and founder.
Can everyone hear me okay? Anyone hear me? No?
Yes,
yes, we can hear you.
Perfect, thank you. Great, well, good morning, everyone. I'm Ramsey, and I'm the CEO and founder here at Focalpoint, a company that is supercharging the GPS chip in your smartphones and wearables to boost their performance by more than a factor of 10 in accuracy, sensitivity, and integrity. We are, in fact, the only people in the world who can determine the arrival angle of the signal from space through software processing alone. And not only does this allow us to make traditional GPS processing much better, but we can combine this knowledge with 3D building models to unlock a whole new way to even use GPS signals to position. We can effectively image the city that you are in as you use our device. So this unique and patented capability also allows us to detect and locate spoofing signals as well. So current anti-spoofing technologies typically rely upon either encrypted military signals or military antennas that cost about $10,000. But we can provide better anti-spoofing performance than those military methods using just a simple low-cost software upgrade on a smartphone. Next slide, please. We've got two main products, the upgrade for the GPS chip itself that I've just described, but also a human motion modeling system that we can deploy in the application layer to provide indoor positioning capabilities, such as what you can see on the slide here. And together they transform how we experience and use GPS. So some of the immediate use cases include things like mobility and delivery solutions, from ride sharing to accurate last meter deliveries. Site safety, security, and contact tracing are becoming a growing use case for us. So we provide precise and trusted positioning to enable geo-referenced and geo-fenced solutions. You can see in this picture the difference between how well we could do contact tracing versus an iPhone, for example. We can provide major advances for fitness wearables. So we accurately measure the distance traveled and the current pace and enable personalized coaching and a level of live pacing information that's not available on existing fitness wearables without our tech. So we're going to greatly improve people's performance on their marathons and during their training. And we do all of this using just the existing sensors in that smartphone. We don't add any beacons or infrastructure. Next slide, please. We've got a number of signed deals already in place, one with a major USA chipset company and a sports fitness wearable provider as well. We're in the middle of negotiating more licensing deals right now with chipset, handset, and smartwatch companies. And so we're scaling up right now to support all of this interest. So if anyone in the audience is interested in becoming part of Focalpoint success, please do get in touch. And I'll take any questions now. Thank you very much.
Fantastic. You mentioned COVID contract tracing. They must be biting your hand off for some of this tech.
Well, it's certainly been a very interesting last 6 months. Proximity detection has been something that I think no one outside of my world had ever heard of, and now everyone uses the word proximity detection every day pretty much, and everyone's waiting for the NHS contact tracing app to come out. So yes, there's a huge interest at the moment in understanding how close you are to other people and where you've been, and I think that will be needed to get the economy going again. There'll be contact tracing apps to get people back to work, never mind to get people to the supermarket.
And it's very much a B2B model. I mean, would this find itself in amongst the handset makers at Samsung and Huawei and Apple?
So we are indeed B2B, yeah. So it's those sorts of entities that we're currently negotiating our license deals with. The GPS technology has to go inside the chip, and it's then enabled by the handset operator. The human motion modeling tech, the indoor positioning tech, that can be deployed directly by an application. So Google Maps, Uber, any of those sorts of entities can come directly to us for that software. They don't need to wait for the GPS chip to get upgraded.
Thanks.
Thank you.
Okay, great. So we're on to our final pitch, Satellite View, with Anthony Baker, CEO and founder.
Hello. So yes, I'm Anthony Baker, CEO and founder of Satellite View. I've helped scale up at least 3 different companies in the satellite industry with valuations over $1 billion. Satellite View is going to launch a small constellation of infrared satellites that can measure the heat emissions from every building on the planet. With this data, we can make better business decisions on where our energy is being used, how it's being used, where it's been wasted from buildings, and so we can go and start fixing them. So this is very important in our climate change era. Our customers include green investors, insurance companies, and obviously governments. Even oil companies want to know how their footprint looks, and they're interested in our data. So our tech partners are Surrey Satellites, University of Oxford, and ESA, and we intend to launch our first satellite in 18 months' time. Next slide, please. So you probably have some familiarity with existing Earth observation data. In optical and in radar, you can look at the outside of a building. With infrared, you get a sense of what's going on inside from the thermal activity. So we open up that box and give a lot more impressions. If you looked at this factory, this could be the iPhone factory. We could tell you how many shifts it's running, which is very important for if you're in a trading business. Or on an environmental case, you might be looking at these flares, and these are highly regulated and for greenhouse gases, etc. So where have we been? We've got over 100 qualified customers and 16 letters of intent, and we've identified a $2 billion market. Our minimum viable product is this camera on a plane, and we're flying it up and down starting in July. We have 6 leads in doing that. With the money that we are raising, we're unleashing the grants, some from ESA, so that's very topical. All to launch in about 18 months' time, our first satellite. So we're looking for investors, partners to add value to our data and bring it to new industry sectors, and obviously end users. Thank you very much.
So you said your minimum viable product is a plane, but I presume this is going to go on a satellite as well?
Yeah, no, so the satellite's about 18 months away, but people want early data so they can integrate it into their machine learning and AI and into their processes today. And in fact, it'll help us get pre-launch contracts. So we're running these paid trials where customers are paying us to fly over their targets of interest. And most of it's in the finance at the moment. So with COVID, you've seen the stock market go up and down. If there's better data on the economic activity, then trading will be more stable, hopefully. Also, there's talk of a green recovery. So governments want to put money into green products and green businesses. We can help identify which ones are the greenest or maybe the worst, and they're the ones that should be upgraded.
I see. Thanks so much. Well, thanks so much, everyone, for joining us. Thank you to our panelists and our participants. Just as a reminder, I want to say thank you to Dr. Barbara Ghinelli from the Harwell campus, Mark Boggett from Seraphim Capital, and Jason Maruth-Naden from the European Space Agency. Thanks also to our pitching companies, Angoka, Focalpoint, and Satellite Vu for pitching. You've been attending the Europas 2020 SpaceTech Deep Dive with insights into SpaceTech and the impact of COVID-19 on the sector. The full recording of this will be shared with you all soon, along with contact details in case you want to keep the conversation going. We also have a Slack community as part of the Europas Awards for participants to network there, both before and after the workshops and during, etc. So from me, Mike Butcher, thanks very much for joining.
And thanks for joining.
Thanks.
And our next session for tomorrow. And our next session for tomorrow is EdTech. Thanks again, everyone.